Okay. All right. It's the 10th of Jan, Friday. Just a second. Sound is good. Yeah, I think sound is good. Yeah, I had some issues with the internet with the service provider. So I've just got my internet back. So we missed the NFP news. That's fine. Okay, very quickly. Let's just go through what's happening on the daily time frame. Just as expected, we're creating higher highs and high lows, high highs, high lows, high highs, high lows, high highs, high lows, and high highs, high lows. This is the current daily candle. We crossed 2673 weekly resistance yesterday, but closed below. And today we've filled the wick. I think that was during NFP. Let's go take a look at the trading chart. Just a second. Let me just see. Yeah, we're good. Okay. Um, right. Yeah. So that was the NFP trade. That was a beautiful opportunity. We just came down for liquidity, grabbed liquidity from our liquidity candle that we had marked yesterday, and pushed up 145 pips. It would have been amazing to take that trade. That's exactly where I would have placed a pending order, but that's happened. Anyway, let's just recap very quickly what happened yesterday. So let's ignore all of this and look at 1 second. Just give me a second. Yeah. Let's ignore what's happened to the right now and just look at what happened, recap what happened yesterday. So I had given this out. These were the entries. 2675.48 was an entry. I said stop loss was going to be above 2678.22. I had placed pending orders here. I had placed another pending order somewhere just there. The pending order got triggered. I had also taken a sell trade here, I think, at 267, just above 2673. I took a sell trade, which got triggered. Price came down, but then later on, I think about 30 minutes later, went up and triggered my order right to the pip. It was a perfect entry, 2675.48. I'd given these entry, I'd given the stop loss, I'd given the TP levels. Came down to my final TP. This trade was, I think, yeah, it was about a 27 pip stop loss, and the final TP was 113 pips. So that was probably about a 5 hour trade, I think. Maybe 4.5 hour trade, right? It was a fairly decent trade. I gave this out and I said, for those who are looking to buy, wait for price to come to a area of liquidity. What are the areas of liquidity? Right here, right? Take a screenshot of this. These are the areas of liquidity. And where did price come to? It came to the liquidity candle that we had marked early on in the session before the NY open. These are also liquidity levels. These EMAs, there are two EMAs. Those two are also liquidity levels, just as mentioned here. Point number 4. It came there and price continued up. Okay, but I didn't take that trade. I took the trade coming down. Okay, so let's get rid of all of these and okay. So don't think I'm going to be doing anything today because price has already moved and it's a Friday. The move has already happened. It's pointless in trying to do anything right now. I'm going to very quickly, we got about an hour for the, let's look at the 50-minute time frame. Yeah, we are rejecting. That's a liquidity grab. Okay, so we're heading higher. There's no doubt about that. We're heading higher. We're going to break this high here, right? But there is no possibility of entry because this, unless price comes back down, there is no point chasing price here, right? It's 150, it's moved 155 pips. So unless price pulls back down and we get a trade, there's nothing to do today. So I'm just going to draw the zones and probably have a very short session today, and probably see if there is a possible trade idea for later on of the NY session for the next couple of hours. Okay, let's quickly do that. Okay, let's extend. Okay, let's look at 4-hour zone now. Rally base. Okay, so that's a zone right there. Okay, so that's a rally, two base-in candles, and a rally, leg out. Okay, the leg out closed above 2673 weekly resistance. Okay, so that's the leg out. So this zone here now needs to come further down because we've come deep into it here, right? Let's get rid of this candle here. Let's put in the numbers there. So that's 244, and the low of that is 273. 273, 244. Yeah, so this is the leg again. This is the leg in, or the rally, two base-in candles and a rally, right? Leg in, two base-in candles, leg out. Let's extend this to the right. Here is low is 273, so yeah. Let's extend this. These are all zones that we have drawn yesterday, so I'm not going to waste time explaining them or redrawing them. So that's the closest 4-hour demand zone, closest to current price. Okay, rally, two base-in candles and a rally. Now let's get this label across here for now. Delete this one, move that there. Okay, unlikely price is going to come down, but let's anyway have this here. Move this to the right. For those who are trading later on, can use these zones for the rest of today and also for next week. So that's the reason that I'm extending them to the right. Does my sound good? Yeah, yeah, it should. It's okay. It's okay. Okay, so right now we've grabbed liquidity. Where is it heading to? To the liquidity candle, right? So let's extend this to the right as well. That's the supply zone that we had marked, that I've spoken about all week this week, and that's a liquidity candle inside that, and it's heading to our TP of 2685, right? So for those who bought yesterday, I mean that was your final TP level that I gave, 2685. That's exactly where price is heading to. Okay, so that's the closest H4 supply zone. That too is a high liquidity zone, right? Perfect. Now, please don't try to sell. Yeah, don't try to sell. We are very bullish. That's a massive liquidity grab. Please do not try to sell unless price slows down and you see M30 resistance form at a liquidity area, at an area of liquidity. Yeah, that's better. Area of liquidity, right? At one of these areas, one of these 5 areas, right? This one, no, because this is not going to happen today. I've already spoken about this. This happens very rarely where the EMAs cross each other. And at that same time, where they cross each other, price touches that cross. That's very rare. I've seen it happen like a couple of times, once or twice last year, the entire year. The EMAs do cross each other often, but price touching the exact point where it crosses over during the NY session, very rare. Almost never happens. So these four areas, that's your liquidity areas, right? So when I mention or when I say liquidity weight at a liquidity area, it's one of those four areas. Okay, so that's where price is heading to. If price doesn't find enough liquidity here to go down, what's it going to do? Next level of liquidity, 2700. If it doesn't find enough liquidity there to go down, where is it going to go? The next liquidity candle right here, right? These are levels that we had marked early on, so I'm not going to spend time talking about them. You can watch any stream this week, Tuesday, Wednesday, Thursday. All these zones were explained very clearly, right? This is where we're heading to, 2685. I'm going to delete that for now because that's where price is heading to, right? Yeah, I said the price is going to go above that high, and that's exactly what it's done. It's gone above the high. This is a liquidity grab, right? There is nothing. It's grabbed liquidity from the liquidity candle that we had marked. Let's go back and mark that candle. Yeah, this is that candle, right? Was this the candle? Okay, we'll get to that in a bit. Right, so we've marked a new. Yeah, we've marked a new 4-hour demand zone. Now we got to check if the demand zone is a high liquidity zone or not, right? Has it taken out anything on the, has it taken out a zone on the left, right? So go down to the 1 hour. Yeah, so there is a zone here. There's a rally, there's a single basin candle, and there's a drop. And this move up broke above that, right? So this is a high liquidity zone. So we're going to keep our label here. Now this is already high liquidity zone. It's been there since, I think, since we drew this zone in this around the 13th of December, 12th, 13th of December. The zone has been there, right? Now this is, let me just save this, and let me repeat what I said yesterday. I said this several times yesterday and the day before. So let me repeat all of that. This is a daily time frame. Okay. Look at where price is. Look at where these wicks are. I drew a line here yesterday. Was it? Yeah, yesterday I was drew a line. Okay. Rejection wick. Rejection wick. Rejection wick. Price is there for the 4th time. Same area. And where is that area? Right at where 4-hour supply is. There's a high liquidity candle there. Can we expect a push down? Yes, that is possible, right? But you got to wait for confirmations. You got to wait for M30 resistance to form, and then if you see a setup, you can take the trade. But remember, the safer stop loss is going to be above the liquidity candle. So the liquidity candle is this. Let me go down to the 30-minute time frame and show you guys what the liquidity candle is. It's visible on the 30-minute and the 15-minute, right? It's the same candle. That's the candle. Also visible on the 15-minute, right? A big candle. But it's better on the 30-minute because this candle has no top wick, right? So that's the candle. The safer stop loss would be above 2690, right? So maybe 269.4, 269.5, somewhere, yeah, about 26, what's this, 2690.16. So basically around 2690.5. 2690.5 or 2690.4 is your safer stop loss, right? Now, for you to take a sell trade, you got to wait for M30 resistance to form. Remember, I've been saying this all week, and I've been saying this almost every day when I stream. When you're counter trend trading, Wait for M30 resistance to form. Don't try to take an M15 bear candle when you see the first M5 or M15, even for you scalpers, don't try to sell the first M5 bear candle that you see or the first M15 bear candle that you see, because we're very bullish. We've grabbed a lot of liquidity, right? This entire wick is a liquidity wick, 126 pip wick to push up, right? So it's likely price could easily break this because if there's a lot of momentum, we've grabbed enough liquidity from the EMAs, from 2673. There are many areas for price to have grabbed liquidity. EMAs, two EMA level areas, 2673 weekly support, and also that liquidity candle that we had marked. Okay, so it's grabbed liquidity from all of that. Let me just go back and draw that. Was this the candle we had marked yesterday? 39. No, this was the candle. Yeah, this was the candle that we had marked. This one right here. And price grabbed liquidity and pushed up. I think on the 30-minute time frame, was it? 41, 69. Yeah, this candle right here. Price grabbed liquidity from it and is pushing up, right? There is nothing to do. Unless price pulls back, there's absolutely nothing to do. There is no opportunity, at least for me, according to my trade plan, for me to get in on a trade, for me to get in on a trade. There is no opportunity, right? This is a news, some call it a news spike, right? But all it is a quick grab of liquidity, right? It went down, caught everybody, caught all the sellers, and then went the other way, right? But if you follow the way I share my analysis, you'll understand that there is more to it. It's not just a news spike, right? It's not just catching sellers. It's not that. Price came down to grab liquidity from an area that we had said, this candle right here. Let me just draw that candle. So this was the candle, right? We had marked yesterday. This was the candle we had marked yesterday. Price came there, grabbed enough liquidity, pushed straight up. Okay, that's what happened. That's all that happened. It came to a demand zone, a high liquidity demand zone, grabbed liquidity, enough liquidity to go high. Why? Because we are bullish, right? Price is heading high. That's what price is doing. We're bullish. We're creating. If you look at the daily time frame, we're bullish. If you look at the weekly time frame, we're bullish. We've created weekly support, and we're pushing up. So we're bullish on the weekly, we're bullish on the daily, and we're bullish on the 4 hours. Right? This is the 4 hour time frame. You can see how we're in an uptrend. So the momentum is up. All price needed was to head higher, was to come down and grab liquidity to go higher, to go even higher. Right? That's all price did. So that's a clear understanding than just saying that price took out stops or price caught sellers or price or this is a news spike, which really can mean anything, right? There is no real substance to that explanation. But when you look at it like this, when we had drawn this out yesterday and we said that price was going to come there, and that's exactly what price had done yesterday. We had a zone here and price came to that zone, and then today it came back to that zone and grabbed liquidity and headed up. Okay, so now let's look at, there's nothing to do, there's absolutely nothing to do unless we see a 30-minute candle, 30-minute resistance form. There's absolutely nothing to do right now. right? We can't buy because we're inside supply. At least I can't buy because it's against my rules to buy inside a supply zone. That's a supply. Anything that is dark red on my chart is supply. Anything that is dark green on my chart is demand, right? So I cannot buy inside a dark red or supply zone, and I cannot sell inside a dark green rectangle or demand. Okay, so I cannot buy because I'm inside supply, and I cannot sell because I have no confirmations for sell. Okay, now let's just look at what now we have a demand zone here. Price has touched it. Let's inspect that area. That's a 1 hour liquidity wick. Let's now its price has created fresh liquidity here. Okay, that's the wick. Let's go down to the 30-minute. We can narrow it down, go down to the 15-minute, narrow it down further, go down to the 5-minute. That's a 68 pip candle. That's a 68 pip candle too. Okay, so we'll have to do the numbers on this, which is larger. So I calculate basically from the candle high to the candle low, candle high to the candle low. Okay. So this high is 75.92. Oh, 687. And this is 73.25. Oh, 687. The candles are identical. They're exactly the same size, both 5-minute candles. Interesting. We'll have to go down to the 1-minute. 44 pips. 51 pips. It's that candle right there. Okay. Okay, so I would use this candle basically. 73.25. 638. Three two five 638. Okay. That's a liquidity candle right there. Okay. It's inside that wick. So now price can come there today, or it can come there somewhere next week on Monday. But that's the area for liquidity for price to continue higher. That's the area of liquidity, and that liquidity candle is right where weekly support is. So it's perfect. It's great, and it's also where the EMAs are. Okay, but the EMAs obviously can move if price heads higher, but these weekly support resistance levels are not going to move. They're stationary, and so is the candle. The candle's not going to change. So now if price pulls back, maybe there's an opportunity, but I doubt it. I think we have enough volume to continue higher. Yeah. So really, there is nothing to do right now than just watch price. Yeah. Okay. Gotta wait for. Yeah, this candle broke this low. This candle broke this low. So price will have to come here for me to take buys. I'm not taking a trade with 129 pip stop loss, obviously not. So maybe if price comes back to 2673, I might attempt a buy, but that too maybe not. I might wait for another M15 candle to form so that I have a smaller stop loss, because that's a 88 or 89 pip stop loss, and I'm very uncomfortable with large stop losses. So price would have to come down deeper, create another M15 bull candle for me to continue to take a trade to go up. At least then I know where to put my stop loss will be smaller than this. Because I wanted to, so basically what I'm saying is I want price to come down, grab liquidity from this area, and then close M15 bull candle so I can take a trade up. Unless that happens, I'm not doing anything. 694, 410. 694, 410. Okay. Yeah, so now we just wait. Just save this. Okay, now somebody asked me earlier today, how can I make money with your streams? Sure. So this was yesterday's. Just show it on a demo. I'll show. This is my live account. This is a live account, but I'll show this on. I'll show this example here because I don't want to. Okay, so this is where the stream ended, right? This is how the stream ended yesterday. If you watch the last 15 minutes of the stream, maybe 20 minutes, I think the last 15 minutes or 20 minutes of the stream, this is what you would have seen, right? This is exactly what you would have seen. I said that, go to the 30 minutes, okay? Okay, yeah, so this candle, I said 30 minute, and I said this at the beginning of yesterday's stream as well, during the prep session. So at 30 minutes before NY open is when I do my prep work and the analysis, and I said that a candle can close above, 30-minute candle, and then close back inside the zone. And that's exactly what happened. Closed above, closed back in. NY candle, pre-NY closed above, NY 30-minute open candle also closed above, and then 30 minutes after that, a 30-minute candle closed inside. So I had taken a buy here, but I quickly closed it soon as this candle closed, right? So I managed risk. Now, after that, I said we have an opportunity for sells, right? I had placed the fib. Once this candle closed, I said wait for M30 resistance at a liquidity area. So 2673 is weekly resistance. That's a level of liquidity. I said wait for M30 resistance to form. It did, right? I took the trade live. This candle did close here. It closed inside under 2673. Once it closed, I drew my fib, right? Fib was based. I need to see a minimum of 2 M15 highs break. This one broke this side and this one broke this side. So perfect. That's the candle that I draw the fib on. And then inside that, I said I looked for a liquidity candle, right? I think on the 5-minute was it? Yeah. This was the liquidity candle inside that area, right? This is a liquidity candle. So I drew this red and I placed a pending order at the end of that candle, right there, the low of that candle. 267548 was the low of the candle. I also placed a pending order at 2676.12, I think, somewhere there or a little higher. 2 pending orders. I placed a pending order at 2673, so there in total 3 pending orders. 2 of them got triggered. This one got triggered soon as price came up, and then it went down, and then it came back up and triggered this. Stop loss was above that. So here's what I want to show you guys. Um, 'Cause and 2678, 2678.22. Okay, so to answer the person who asked me, how do I make money off your streams? Okay, sure, here's the answer. I'd given this out, so you could have taken the exact same entries I took, the limit orders I took, right? And if you took my limit order, I'd given out these TP levels. These were the final TP levels. I said 2665 and 2664. So let's say you got out at 2665. If you traded one micro lot, right, you'd have made 10 bucks. That's a 104 pip drop, right? And to make that 10 bucks, you'd have risked only $2.7, right? Now, let's if you traded one lot, you'd have made $1,053. And to make that 1,053, you would have risked how much? $269, right? And if you traded 10 lots, same TP, 2665, you would have made $10,480. And to make that $10,480, you would have risked $2,740. So basically, you would have risked 25. You would have risked. Your risk would have been. Your reward would have been 1 to 4, right? So you risked, let's say, whatever percentage that you risked, you'd have made 4 times that. Now, the next question would have been, for me to take a 10 lot trade, what kind of account balance should I have, right? So that is why I've created this for those in the group, in the Telegram group. I'll show you where to find this. It's been there for maybe a year and a half or 2 years. Make use of this. This is carefully thought out. So whatever your account balance is on the left, right? Whatever account balance is, and this thing is important. This is the risk of blowing your account. So if you trade for, let's say you have a $1,000 account, and the trades that you take are 0.02. You took a 0.02. That's 2 micro lots. If you trade like that on $1,000, you will never blow your account, never. Okay, and if you limit it to 2 trades a day, you'll never blow your account. And the further left you go, the higher risk gets, right? So on that same $1,000, if you could risk 0.04. That's just medium risk, and that too would be okay, right? But now further left you get, your risk is getting higher. So now on $1,000, if you risked 0.08 or even 12 mini lots, right? That is 8 micro lots, right? At a higher risk, and if you risked, let's say, if you took a position of 12 mini lots, now your risk is high. So maybe you won that trade, but risking 6% on a trade is very high risk. So this is a very bad idea, right? It's just a matter of time. If you risk 6% on your account, if you're new to trading, or even if you are been trading for, let's say, a couple of years, if you're risking 6%, 5-6% on a trade, that's a bad idea, because it's just a matter of time that you're going to blow your account, right? So these 2 columns are a better space to live in, a better position, fixed position size of fixed lot sizes for your account, right? And this goes all the way down up to $5,000. You can just extend these further down, and it'll give you the correct values for your account size. and you will find that on the group. You will find it here. Yeah, so if you go to under risk management, in the group, in the price action entry alerts group, you will find there's a section called risk management, and you will find the Excel file there, right? So that's what it looks like, and that's what I showed you guys. And that if you just download that and follow that, and you stick to the first two columns, you should be good. You should be golden, right? Don't use these two columns. Those columns are there just to show you that you start risking a higher percentage of your account balance, then the chances are that you'll eventually blow your account. Okay, so don't do that. Let's go back here. Yeah. Okay, so we're still pushing up. As I said, we're going through, seems like we're going through that liquidity candle because we've grabbed, as I said, a lot of liquidity. When you see a wick this size, 127 pip wick, that means price has grabbed a lot of liquidity, right? This is session trading, so I use the M30 time frame to understand size of wicks, sometimes H1 time frame. But when you see a wick this size on the 30-minute time frame, that means price has grabbed enough liquidity for it to head high. It does not need to pull back to grab more liquidity. It doesn't need to do that. It's grabbed enough liquidity to head higher. So it's unlikely price is going to come back here. Almost there's no chance that that's probably going to happen today. It's a very, let me say, I don't want to speak in uncertainties. So there is a, it's very unlikely. There is a slim chance. There is like probably a very, very little chance that price is going to pull back all the way down here to go higher again, right? Because it seems to have grabbed enough liquidity to push up, right? And I think we should push through this liquidity candle, and we know where we're going next. What happens once we push through this? Where are we going? To 700, right? That's the next area of liquidity. So this is why I speak in terms of this, because it's a roadmap. You know where price is heading to next. It's heading to grab liquidity. That's all price does every day. It goes from one area to the next area to grab liquidity. If it finds enough liquidity at that area, it'll go in the opposite direction. If it doesn't have enough doesn't find enough liquidity in that area, it'll go to the next area. If its price is bullish, then it'll go to the area above, the next area that has liquidity, the next area of liquidity above, right? If it finds enough liquidity there, then it'll go the other way. If it doesn't, it'll go to the area above that. Yeah, so let's just inspect what's left of this also, since we're doing nothing right now. Clean space, right? It's got a 15-minute time frame. Yeah, nothing, just clean space. So once we break this candle high, this candle is 90.16, we should be good to continue another 100 pips easily up, right? We've already done about, what, 256 pips today? That's the ADR. That's the average daily range for the day. It's done 256 pips today. The average 3-day average daily range is about, that's more visible. The 3-day average daily range is about 262 pips. So which means if you calculate the last three candles, the average daily range of the price movement of those three candles, the average price movement of the last three candles is 262 pips, right? That's a 4-digit because of it. The last digit is a point. So you just look at the first three. So that's 262 pips is the average 3-day average daily range. So we've already reached the 3-day range. It's a high volume day because it's NFP, so we're very likely going to go above that. We've already reached 262. We got just see 263. We're heading higher, so it's very likely that we're going to cross 300 today, right? So now, if you're going to cross 300, we've already broke the liquidity candle, right? So if you're going to get to 300, we're easily heading up there, right? That's another 92 pips. We're easily heading up there. So there is nothing, honestly, there is nothing to do right now. We just have to watch price go up, and maybe if price creates M30 resistance around here, or even around here, if price goes all the way up here, which is possible. That is just a 250 pip move more to get up there. That's very possible today. On NFP days, I've seen price print 400 pip candles, right? So this is the low of the day, right? Yeah, this is the low of the day. So this is a daily candle low. So yeah, that's possible. 400 pip, that's a 500 pip candle. That's very possible today if it has enough volume to get there. Um, we can have a 500 pip, and then possibly somewhere here you might get M30 resistance and you might have a pullback, but that'll be much later on today. This is the NYSE open. This is the NYSE has just opened, the New York Stock Exchange session. So that should also bring more volume to push price further up, right? So now that it's broke, and the NYSE open is right on time where price broke the high liquidity, I mean the liquidity candle, right? It broke above the liquidity candle. This exactly happened at the time where NYSE session opened. So now price has a lot of volume is going to coming with the NYSE session, that it could push price easily 100 pips to 2700, right? And we can see that happening right now. We have already broken the high and we could go up. Does that mean, do I have a trade? I don't have a trade. There is no trade that suits my trade plan or the way I trade right now. Okay, we are still in supply. I'm not. I don't. I cannot buy. Right. I cannot sell either because there is no M30 resistance has not formed. So once you have these clear rules, um, not just clear but tested rules that you've back tested for maybe a couple of years, and traded for a few years now. I've been trading like this for many years, many years. As far as I can remember. So I know that uh, I do miss out on some trades, and I'm absolutely fine with that because I've seen that this system that I sorry, one second, just yeah, okay. Um, uh, this system works for me. It keeps me patient. It keeps me in check. I wait for price to come to where I want it to. I'm able to visualize something in my head, how candles, I want to see candles form at certain areas, and I wait for those candles to print. And only when they print, the way I visualize them in my head, when I see that, is when I take a trade. So it keeps me, so my trade plan keeps me accountable, and doesn't let me just buy because I feel that price is getting up here. I know price is getting up here, but that doesn't mean that I'm going to buy, right? Yeah. Okay. So I'm going to be here for another 15 minutes tops because uh, I don't see that I'm going to take a trade today because if I had been, if I had traded early on before news, then it's likely that I would have taken a buy soon as, because I had marked this liquidity candle yesterday. We had marked it. I had marked it yesterday, and that's exactly where price came. As soon as price dipped into it, on the 5-minute time frame or even on the 1-minute time frame, as soon as this candle closed, I would have got in on the buy. Soon as this 5-minute candle, even on the 1 minute, right? Soon as I saw, um, where is it? Yeah, this. Soon as I saw a 1-minute liquidity candle, right? This is a bigger candle than these candles. This one stands out. Soon as this candle closed, I would have hit the buy button. Stop loss would have gone under that liquidity candle on the left or under this, and just held the trade because I know where it's going. It's heading to 2700. It heads here. If there is no M30 resistance form there, that means it's heading higher, right? And if there is no M30 resistance form here, then it's heading higher here. So you hold the trade. You bring your stop loss to break even, and you hold the trade and let it run. And that's how you get higher RR trades. So if I had taken this trade, my risk would have been about 50, 55 pips on this trade, and I would have held it to 70, 300 pips. That's how you let your runners run. You don't just um, take partials at certain areas just so that you keep the account, so that you gain confidence. When you do take partials, you gain confidence in your system because you see profit, you see net gains every week. But you always have a runner. You always try to have a runner. 10%, start with 10%. Just hold 10% of your position. For when you understand these liquidity areas, you can see, okay, price came here. There's no M30. There's no M30 resistance formed here. So which means, and we are bullish, there is no M30 resistance, which means price has broken this. It's very likely heading to the next area. So you leave the trade as it is. You close partial positions, leave a position for price to come here. Comes here, there is no M30 resistance form. Okay, leave it. Take a close another maybe 10% or 15%, 20% close of your position and leave the balance to come here, right? To 2715. What's 2715? Weekly resistance. 2715 weekly resistance, right? That's how you capitalize on your trades, on your winning trades. Instead of just adding positions, the positions that you take, your low risk, uh, higher probability trades, you capitalize on them and let them run. Mm. We're just coming down to create a bottom wick. This is not um, a reversal or a pullback. This is just price coming down, create a bottom wick, and then continue higher because this is high volume time. NYSE session is open, so it's just create a bottom wick for price to head higher. We're heading to 2700. We've got 293 pips today already, so very likely that we're gonna go up another 60 pips easy. That should be pretty easy for price to do to get up to 2700 today. Just clean space. There's nothing. We've we've traded into this wick, right? Remember this wick that I showed? That wick, that wick, and that wick, and we've traded. Price has traded into this wick. It's very bullish. Created support, very bullish. Traded into the wick. So we are very likely heading to 2700. Okay. What's the time? Okay, I'm going to be here for another 10 minutes and then we'll call it a day. It's a Friday anyway. There's no need to take trades or your the meat of your trading, right? The meat of your trading, or the chunk of your trading should be Tuesday to Thursday, Tuesday, Wednesday, Thursday, right? Maybe you get a trade on Monday, maybe you don't, but don't try to force anything. And maybe you get a trade on Friday, or maybe you don't, but don't try to force anything. So your main trading days should be focused on Tuesday, Wednesday, Thursday. If you're a session trader, that is, right? If you're a swing trader, then it doesn't matter. You're looking at the charts maybe um, 2 or 3 times a week, right? Because you're looking at probably the 4 hour time frame for setups, or yeah, the 4 hour time frame. So you're not looking anything below, like how I look at the 15-minute and 30-minute time frame. You're looking at the 4 hour time frame and the daily time frame, right? So my equivalent of a 15-minute for a swing trader, um, my equivalent of a 15-minute time frame is a 4 hour time frame for him, and my 30-minute time frame is the daily time frame for him if you're a swing trader. So you're looking at the charts maybe 2 or 3 times a week at the most, and you're taking your stop loss is obviously going to be a much wider, because you're trading off the 4 hour chart, and but your TP level is also going to be much higher. You're looking at 300 pip moves, 400 pip moves, 500 pip moves, sometimes even larger, big moves, right? You're looking at moves like this on the daily time frame. Price creates support. You're looking to take a trade, and you're looking to ride it until you see the next daily candle, rejection from one of these key areas. Okay, that's what you're going to look at. You're drawing your zones on the daily time frame and on the weekly time frame instead of the 4 hour time frame. So that's you're drawing a supply zone here, right? Rally, base, drop. That's your zone. And when price comes to that zone, you take partial positions, or you go into that zone, go to the 4 hour time frame, and look for a liquidity candle on the 4 hour time frame, or on the 1 hour time frame. At the most, you don't go any lower than that. Ideally, your liquidity candle should be on the 4 hour time frame, right? Because that's where you want to take partial positions of. So just like I look for liquidity candles on the 30-minute or on the 15-minute, you're looking at the 4 hour. And that's if you're swing trading. Those are ideas for swing traders. Okay. I'll be back in a couple of minutes. Okay. Right. Um, okay, so here's the end of session trade ideas for those continuing to be at the charts um, for the next couple of hours. Okay, here are the ideas. Now, price could pull back, might not pull back all the way down here, but it could. I said there's always a chance that it could, right? If it pulls back, for those who want to buy, wait for it to pull back, wait for support to be formed, right? Um, and then take a trade to retest the high or hit to 2700, right? So you can wait for support to be formed on the M15 time frame because you're trend trading. But if you want to be safer, then wait for M30 support to form and take the trade to go up, right? If you want to be a little more conservative and safer with your trades, then wait for M30 support to form. But you can take a trade if you want to be a little more aggressive because you're with the trend. Wait for M15 support to form. You have to wait for support to form. Don't just buy because you're seeing a pullback. You have to have confirmation, some sort of confirmation, either on M15 or M30. M30 is safer. M15 is a little riskier, a little less safer than an M30 support, right? So wait for M15 or M30 support to form to take the trade to go and retest the high. And once it does, if you have M15 candles close inside this area here, that means we're heading to 2700. Okay. Uh, for those who want to sell, wait for M30 resistance. Again, I say the same thing. Wait for M30 resistance to form, then draw so this M30 candle should close in 12 minutes. I don't know how it's going to close, if it's going to close like this, lower, or go back and close as a doji. But you got to wait for M30 resistance to form, wait for the pullback, and then take a trade. So wait for M30 resistance, wait for price to pull back and create an M15 bearish candle and then take the trade. The reason I say that is because we're very bullish today. We have a lot of bullish volume and we're very bullish. So wait for M30 resistance to first form, then wait for price to pull back and wait after that for an M15 candle to close and then take the trade to come down. Because once you have an M15 candle close, you can safely place your stop above the high of the M30 resistance candle, right? So if this is, for example, if this candle closes bearish and this is the candle that forms M30 resistance, and you have price pulls back, and either the next candle or the candle after that or the candle after that closes the M15 bearish candle somewhere here, you can place your stop loss above this candle and anticipate price to come back down. And where is it going to come down to? To one of the liquidity areas, either to the EMAs or back to weekly support or back to this liquidity candle, right? That's for those who want to sell. I don't advise to sell today, but those who really want to sell, that's the trade setup that you should be waiting for. For those who want to buy, I've already explained. You have to wait for a pullback, right? If there is no pullback and price just continues up, well, I really don't recommend buying because price can pull back anytime to this wick or this area to grab liquidity, right? That can happen at any time. So it's better to always wait for some sort of confirmation to take a trade up, right? So again, for those who want to buy, wait for price to pull back, create some sort of support, M15 or M30. M30 is safer than M15, and then take a trade to go up. But if you are, because you're trend trading, you can wait, you can take a trade after M15 support forms. All right. Okay, so that's it for me. Um, 1 second. Just look at the M15 time frame again. Yeah. Yeah. So also one more thing, important thing. Wait for this candle to close, right? This candle is the close of the 4-hour candle. Now, usually when the 4-hour candle closes, the price pulls back to create a bottom wick for the next 4-hour candle if that 4-hour candle is to head up, right? And because we are bullish, we can, sorry, because we are bullish, we can um, anticipate that the next 4-hour candle is also going to continue higher, right? So, but it'll need to create a bottom wick first. So wait for price to pull back. If price is to, if the next 4-hour candle is to break this current candle high and head higher to 2700, then it'll need to create a bottom wick first. And creating a bottom for a 4-hour candle to create a bottom wick can take anywhere between 15 minutes to an hour, right? So that means the price is going to pull back or is going to range for a while. So don't be in a rush to take a buy, right? Just wait for that pullback. Wait for that um, structure that I just explained, right? Visualize that in your head and wait for that to wait for the for the chart for the candles to print what you have visualized, right? So also, once this candle closes, you have to redraw your demand zone, right? So which means now um, this is going to be a rally. That's going to be a base in. All of this is going to be the base. This is going to become the rally. And 1, 2, 3, 4, 5, 6, 7 candles are going to be your base. So your base, so your zone is going to look like this. But provided this closes a strong bullish candle, right? This has to become the leg out, right? This has to be the rally base rally, the leg out. So we've got to wait for 7 minutes for this candle to close. So if it does close where current price is right now, if it does close like this means we are very bullish and we're going to continue higher today. All the more reason to look for buys rather than for sells. And once it does close here, redraw your zone. So your zone is going to look something like this. Let me just draw it, something like that. That's going to be the zone, right? Those are your base in candles. So that's going to be the leg in or the rally. 1, 2, 3, 4, 5, 6, 7 base in candles, and that'll be the leg out rally, right? So that's your base. So price can come to that, grab liquidity, and then go up. Okay. So wait for 6.5 minutes, draw the zone, and if you are trading, you really want to take a buy trade today, then wait for a certain structure as I explained to print, candles to print in the way I explained it, and then take your buys. Okay, that's all from me for today. I'll be back on Monday. And hopefully, yeah, hopefully I shouldn't have any internet issues. Today was one of those days. Happens every now and then, not often. It's rare, but it does happen. Where something happens with the network provider. Uh, there was a internet shortage. I mean, there was a network disruption in the entire area where that I live. So the entire area I live in. So it's just not. It was just not. You know, it was just not at my place where I live, not my home, but it was across um, the entire area that I lived in. There was some fiber optic cables that had got disrupted. Um, so that took a couple of hours for them to sort out, and things are good. So I'll be back on Monday, 7:30 a.m. Let's just look at next week's calendar before I leave. Next week should be CPI. Yeah, next week is CPI. Perfect. So next week is going to be a high volume week, right? Perfect week to trade. Starting from Monday, right until Friday, there should be volume, right? Now again, you can see what I just spoke about maybe 15 minutes back. I said when it comes to your trading, the meat of your trading or the main positions that you take, the focus of your trading should be on Tuesday, Wednesday, Thursday. And this is why, right? This is where the high volume news events are Tuesday, Wednesday, Thursday. Friday does have now some news events. You can take trades on Friday, but remember that it's the close of the week, right? So the weekly candle sometimes pulls back, so you really don't want to force trades on Friday. And also on Monday. Monday is the beginning of the week and the beginning of the weekly candle. So you don't want to force trades. If you do get a setup, you can take it by all means, but don't try to force a trade on Monday or Friday. But Tuesday, Wednesday, Thursday is where you should be laser focused. Do your prep work 30 minutes before the NY Open. If you're a session trader, do your prep work before 30 minutes before the NY Open. Be ready, draw your zones, be ready. Have a certain setup in mind that you want to really take, and wait for the candles to print in that way, and then look to take a trade, right? But I'm here. I'm here. Hopefully, by the grace of God, I'm here every day. So I do draw my zone, so you can follow what I do. And you want to take the same trades that I do, then you can take the same trades that I do, and you can earn while you learn how I trade, right? Now, but if I have a losing day, then you will have a losing day also. And when I manage risk, you should manage risk the exact same way that I manage risk. Don't hold a trade like what I did yesterday. I manage risk, right? When the 30-minute candle, soon as um, the 30-minute candle closed below resistance, I closed all my trades, right? And you need to do the exact same thing. You shouldn't be holding a trade thinking, no, it's going to go up, I'm going to hold it. No, you shouldn't be doing that. You should manage risk the way I manage risk. So if you're copying my setups, my entries, then you need to copy everything of it, not just the bits where you like. You need to copy everything so that you'll have similar results to what I will have. Alrighty. Okay. So back again on Monday, 7:30 a.m. EST. Have a great weekend, guys, and see you next week.